Good morning. You tune in to Market Cafe. I'm Ankita Saxena, and the next half an hour, I'll take you through all of that transpired on the global front, the geopolitics, the markets, and all the cues you need to watch out for before the start of Dalal Street. So without further ado, let's get going with what's really dominated the Wall Street yesterday. Well, it is the geopolitical tensions that continue to large loom. In fact, after those statements coming in from Donald Trump that he will avenge the deaths of three service members from Iran, the crude prices, shot up, and on account of that, we do see U.S. markets also falling yesterday's trading session. In fact, even the U.S. Treasury yield is sitting higher. The 10-year Treasury note, rose almost more than 5 basis points to 4.5%. The 2-year Treasury yield, which is more closely tracks the short-term Federal Reserve interest rate policy, that gained more than 3 bips to 4.2%. So that's how really the Treasury yield is moving. So bond yield is something that you need to watch out for because, rising bond yields also weigh heavy on the markets. And if you look at the U.S. markets, then the Dow Jones Industrial Average was trading with cuts of 300 odd points, almost more than 0.5% downtick coming in. S&P 500 was down 0.1%, and NASDAQ also was absolutely flat, though in the red, traded with cuts of just 12 odd points. So flat moves coming in as far as NASDAQ is concerned. Now remember, we are in the thick of earnings season, but at this point, really, investors are waiting and watching out for how the geopolitics is moving because the earnings are really cushioning the market. But, the up move will only come in once really there is some bit of a comfort coming in as far as the oil prices are concerned and the bond yields start cooling off. But as of now, markets are awaiting Alphabet, Tesla, and Intel to report their quarter numbers this week, and that is what we are penciling in as far as the big earnings are concerned on the Wall Street. But let's talk about the oil prices also. Well, we did see oil prices shot up yesterday, but as of now, as we speak, they have managed to cool off from this day's high. 0.5% downtick is what we're seeing on Brent as of now. It is sitting at $82.72 a barrel. And WTI is also seeing a downtick of 0.3%, sitting at $82.98 per barrel. And let's take a look at the Asian handover and how that looks like as well. Well, Asian markets look mixed right now. Only Nikkei is trading in the green with gains of 1.8% right now. Only Nikkei is the one that is really trading in the green. The rest of the Asian markets in the red. Shanghai is trading down 0.3%. Hang Seng is flip-flopping between the red and the green. It's trading absolutely flat. S&P ASX 200 is also trading down with cuts of 0.3%. And the implied start to Nifty is showing a gap down start of 113 odd points. So that's what we're penciling in as far as the Nifty is also concerned. But let's move on then. On the geopolitical front, Donald Trump has vowed a forceful response after the death toll amongst the U.S. troops in the conflict with Iran rose to 17, marking one of the deadliest periods since the war began. The comments come even after Iran signaled openness to negotiate yesterday. The renewed escalation has kept the oil prices higher. The Brent crude holding near the $89 a barrel. Listen in.
Iran has been very, very badly damaged. They've lost everything almost militarily. They've got very little left. They've got some missiles. They've got some drones. They've got some manufacturing ability. Not much. We control the Strait. We don't control anything. So we'll see what happens. So we hit him very hard against the ice. He was stopping us from having a certain capability. Now we're just ending it. So it's really not the same thing. What we're doing now is we're ending any chance we think could have a nuclear. If you look at it, after a week and a half, not 4 weeks, a week and a half, 2 weeks, we stopped them from probably, but I don't want to have the word probably.
Moving on then, Yemen's Houthi rebels have announced a naval blockade on the Saudi Arabia, opening a potential new front in the escalating US-Iran conflict. The move threatens shipping through the Bab el-Mandeb Strait, a critical route for Saudi oil exports, raising fresh concerns over global energy supplies and maritime security. And Trump has also announced 50% tariffs on a broad range of Canadian imports, opening a fresh front in the US-Canada trade dispute. The duty is effective 19th of August. Target products including wine, dairy, cement and hockey equipments, with the White House citing Canada's alleged discriminatory trade practices. Let's listen in.
Have a good relationship with Mark Carney, but, we got to stop the fires up there. If we can help them, we'll help them. But maybe they could pay us some damages or something, or just some tariffs. But it was terrible. I mean, you had business closing.
And Britain has a new Prime Minister, seventh in the past 10 years. Andy Burnham has formally taken office after Keir Starmer resigned and has wasted no time outlining his top priority. In his first public remarks as Prime Minister, Burnham pledged to end the homelessness. The announcement signals the new government's focus on social welfare and housing as Burnham begins his tenure at the 10 Downing Street. Listen in.
We will help people to live well, building a more preventative state, investing in people's success rather than paying for failure. And that work starts now. I will soon go through that door behind me and issue my first instruction to end rough sleeping in our country.
And back home, the IMD has warned of an active monsoon spell across large parts of the country this week. An orange alert has been issued for Mumbai, Thane and Raigad today, while Himachal Pradesh and Jammu and Kashmir remain under a red alert. Akanksha is joining us with the weather tracker.
Right. Mumbai and several parts of the country are likely to witness intensified rainfall activity over the next few days. According to the India Meteorological Department, which is IMD, an orange alert has been issued for Mumbai, Thane and Raigad for 21 July, warning of heavy rainfall in this region. At the same time, a red alert has also been issued for Himachal Pradesh and Jammu Kashmir till Tuesday, with the IMD forecasting extremely heavy rainfall in several districts. Now, the Weather Office also says heavy rainfall is likely over parts of northwest India till Thursday, while parts of central Maharashtra are expected to receive heavy rainfall on Tuesday and Wednesday. Apart from this, heavy to very extremely heavy rainfall has also been forecast over Uttarakhand, Bihar, Uttar Pradesh, Punjab, Haryana, Delhi, Jharkhand, Gujarat and Sub-Himalaya, West Bengal and Sikkim. Meanwhile, heavy rainfall is also expected over Odisha, Telangana, Karnataka, Kerala, Konkan and Goa, Madhya Maharashtra, Chhattisgarh and Rajasthan. Now for Mumbai, there is some positive news. The city's 7 reservoirs have reached 54.05% of their total live storage capacity as of 20 July. Now, if we take a latest look at the rainfall deficit numbers released by IMD, so as of July 20, East and Northeast India have reported a 33% rainfall deficit, Northwest India 21% deficit, Central India is at 14% deficit, and the South Peninsula is at 26% deficit. So overall, India's cumulative rainfall deficit number now stands at 23% as of 20 July.
And moving on then, violence has erupted in Delhi during the CJP's Sunset Chalo protest over the alleged NEET paper leak, with police using tear gas and lathi charges after protesters attempted to march towards the parliament. The New Delhi police said that 118 personnel were injured and 70 protesters detained. While CJP leaders vowed to continue their agitation, and activist Sonam Wangchuk extended his indefinite hunger strike. Kritika joins in with the ground report.
Well, the protest started with the core demand for the resignation of Education Minister Dharmendra Pradhan in the representation that Saurav Das, as well as the other founding member of the CJP, Rana, also went and met Union Minister JP Nadda. In their 3 list of demands as well. The first was for the immediate release of Sonam Wangchuk. Second was the resignation, the demand for the resignation of Education Minister Dharmendra Pradhan. So we can see that, in fact, the resignation demand is still, in fact, circulating. However, when it comes to Mr. Wangchuk, he has reiterated that he wants now the opposition leaders to, in fact, ensure him that these issues will be taken up in the parliament, and until and unless that happens, he will not be breaking his fast. Yesterday also there was a health bulletin from the Safdarjung Hospital which stated that while his vitals are stable, his blood parameters are, they are a little dodgy. Sometimes they show on the brighter side, but there are deteriorations, because of which now oral rehydration therapy has also been, in fact, consented to by Mr. Wangchuk. However, he continues to say that he remains on fast and has asked for his release as well. Yesterday we saw that in fact, the leadership of the Cockroach Janata Party, whether it is Abhijit Deepke or Ashutosh Rana or Saurav Das, these people were not physically present for any form of march. There was no clear guideline, no, in fact, clear routes that were communicated to the protesters, because of which, in fact, all of them had taken it upon themselves to go about in different, in fact, routes, and that caused a lot of confusion as well.
All right, moving on then. RBI has said that Indian banks have raised $17.4 billion through the FCNRB deposit scheme since June 8th. As per the RBI swap facility that has witnessed avid interest and attracted steady forex inflows. Anurag Joshi is getting us more details of that.
Indian banks have raised $17.4 billion through FCNRB deposits following the RBI steps on June 5 to offer concessional swaps in a bid to stabilize the rupee. The offshore capital raised via overseas foreign currency borrowings was almost $2 billion, the central bank said, whereas external commercial borrowings raised under the concessional swaps program totaled $1.34 billion. The RBI unveiled steps to stabilize the rupee on June 5, and this followed the rupee touching an all-time lows in May. The measures are offering concessional swaps on new FCNRB deposits, CCBs and OFCBs, and this concessional swaps makes the fundraisings for banks cheaper, as this subsidizes the hedging costs for the lenders, and it makes at the same time it makes FCNRB deposits more attractive for the customers of banks overseas. The RBI swap facility is until September 30 for FCNRB deposits, whereas it is there until the end of the calendar year for OFCBs and for ECBs. The RBI said that the swap facility has seen an avid interest and attracted steady forex inflows.
And let's move on then and talk about all the cues you need to watch out for before the start of D Street. For that, my colleague Rabindra is joining in with all the stocks in focus today.
Well, as Interglobal Aviation can be in focus, where Interglobal Aviation has signed a MOU with CFM International for more than 1,000 LEAP 1A aircraft engines, and this deal also includes setting up MRO capabilities for the Indigo expanding fleet, and this will be the largest ever single order for LEAP engines and a record order for CFM International. Apart from this, Reddington can be in focus, where Reddington has entered into a 5-year strategic partnership with Resultrix, and the partnership aims to expand real-time customer engagement solution across India, Middle East, Southeast Asia and South Asia, and the two companies are targeting a market opportunity of more than $150 million during the 5 years partnership. Apart from this, some of the stock that can be that will be in focus in today's session is Action Construction. Company has reported very strong set of number in Q1 FY27. Company's revenue grew by approximately 21% on a yearly basis at rupees 786 crore, and profitability has also grew by from 13.6 crore to 51 crore, and the profitability growth was mainly led by lower finance cost, and company has achieved its best ever Q1 Q1 revenues and margins expanded sequentially, which is driven by prudent cost management and calibrated price action. Canara HSBC Life can be in focus after reporting its good set of number. A company's net premium income was up approximately 24% on a yearly basis, and protection business grew by 41.5% on a yearly basis, with the share of protection increasing to 13%, and company delivered healthy growth across the key business and profitability metrics. And Q1 saw continued investment in building future growth engine, and VNB growth was supported by the favorable shift in product mix toward protection and traditional offerings. And lastly, Rallis India has also reported very strong set of number in Q1 of FY27. Revenue grew by approximately 7% on a yearly basis at rupees 1022 crore, and profitability has also grew by 31.6%, and profit growth was mainly aided by the lower finance cost, and company delivered broad-based growth across businesses, which is supported by focused market intervention, portfolio strengthening initiative and improved profitability. So back of this strong number, Rallis India too can be in focus.
All right, so all those counters in focus on the back of that news flow, but Meryl is also joining us with her list of stocks that will be on the radar today.
Yes, these are some stocks which are expected to be in focus as well. Starting first with transformers and rectifiers in focus after reporting a mixed sort of quarter. Revenues were seen rising up to 8% for the company on a year-on-year basis, while EBITDA margins remain largely stable at 16.3%. The company also further flagged that growth was impacted by lower capacity utilizations at its Changodar plant, where expansion work is currently underway. In the other sector, in real estate space, Ashiana Housing is in focus, The company has converted 224 units into bookings at its Ashiana Oma project with a total sales value of 372 crores, and Aether Energy has successfully raised up to rupees 1,300 crores in a QIP with marquee investors including HDFC Mutual Fund, Axis Mutual Fund, Edelweiss Mutual Fund, and also the ADIA, all participating in this issue. Also in focus is RITES after it has signed an MOU with Mecon to jointly explore and execute business opportunities, which is a move that could strengthen its future project pipeline. And MCure Pharma is on the radar after its semaglutide brand Povystra has received approval in India for treating non-cirrhotic MASH, which is a liver issue, which is a quite serious liver fatty acid issue. And this makes semaglutide the very first GLP-1 which is approved for this therapy, which is expanding the scope of this drug significantly in India. In the on more negative news, we've got PNB Housing Finance in focus. It has classified Happy Home Constructions account as a fraud involving 421.8 crores and has reported the matter to the National Housing Bank. And finally, Acme Solar has announced that its subsidiary has commissioned a 160.5 megawatt-hour battery energy storage system project in Rajasthan, which is marking another step in expanding the company's clean energy portfolio. So these are some stocks that we should watch out for and trade today.
All right, Meryl, thank you so much for joining us with that. But let's also talk about Soba. That will be in focus on account of its strong quarter as the net profit and EBITDA more than doubled on a year-on-year basis, and strong revenue growth drove the profitability. Ravindra is now joining us with the earnings fine print for Soba. Let's take a look.
Well, as Soba Limited reported its Q1 FY27 earnings, and company reported a strong Y-on-Y performance, but the number was below the street estimate. And revenue, if we talk about the financials, then company's revenue increased by 50% on a yearly basis at rupees 1278 crore, and the revenue growth was driven by the strong project execution, and while healthy collections has also supported the company's cash flow, and the higher revenue also helped the companies to improve the profitability during the quarter. However, other expenses has increased sharply to 278 crore from the 170 crore on a year-on-year basis. And on the operational, company has also on the pre-sales front, company reported a pre-sales at rupees 3,656 crore, which was up by 76% on a yearly basis, which was, and the pre-sales was at a record high. And the strong pre-sales performance was led by the robust demand for the new launches. And during the quarter, the company also completed 671 homes across the 8 projects covering 1.08 million square feet, and collections also remain healthy, which was up by 8% on a yearly basis, supporting liquidity. And Soba has also launched 3 new projects spanning 6.9 million square feet, including Soba One World, and with an estimated GDP of rupees 7,500 crore. So overall it was a strong quarter for the Soba Limited, but it was below the street estimate.
Moving on then, Ultratech Cement struck a confident tone after a strong first quarter, reiterating double-digit volume growth for FY27 and maintaining its expansion roadmap. Management said that the cement prices have improved. EBITDA per ton remains on track to reach 1,400 by Q4 of FY28, while the growth capex will continue to be funded through internal accruals despite the near-term cost pressures. My colleague Ashesha is joining us with the highlights of the con call and the brokerage verdict. Over to you, Ashesha.
Well, yes, after reporting strong set of numbers for the first quarter, the management commentary from Ultratech Cement has also continued to remain very positive. Let's start with the demand environment, and the management continues to remain very optimistic. In fact, they said that the industry grew at 7 to 8% in the first quarter, but they remain confident of double-digit volume growth for the rest of FY27. As far as pricing is concerned, they say that yes, prices did improve in the first quarter of FY27. On the back of monsoon, we will see some bit of pricing impact over the next few months, but it is likely to improve further in the second half of FY27. And the management believes that if demand remains healthy, even if raw material prices decline, they will not go ahead and lower their cement prices. So that is another positive. Meanwhile, as far as capacity expansion plans are concerned, they aim to increase their capacity to 240 MTPA by the end of FY28 rate, and they've already started working on their capacity expansion beyond 240 MTPA, and most of their capacity expansion will be funded via internal accruals. Meanwhile, as far as costs are concerned, they did rise in the first quarter. They are expected to rise further in the second quarter, but the management believes that the cost is likely to decline in the second half of FY27, so that is another positive. Meanwhile, as far as the wires and cables business is concerned, they're all set to launch it in the third quarter of FY27. Citi, meanwhile, has come out with a report. They are maintaining their buy stance with a target price of 14,750. They say that the stock trades at $160 EV per ton versus its historical peak of $200 per ton, and they are increasing their EBITDA estimates for the next 3 years between 2 to 4%. Goldman Sachs has maintained its buy stance, but they have increased their target price to 13,500 from 13,160, where they say that they've also gone ahead and increased their EBITDA estimates for FY27. So clearly, management commentary is positive. Brokerage houses too have given a thumbs up. The stock continues to remain in focus today.
All right, it's UltraTech Cement on the back of the con call highlights and of course the brokerages. But let's move on to Paytm that has also delivered a strong first quarter, reporting record profitability and its highest ever quarterly EBITDA. The revenue rose 28% on a year-on-year basis, while the net profit jumped 79%. Strong growth in the merchant payments, financial services and the UPI volumes, coupled with expanding margins, prompted both Citi and Goldman Sachs to raise the target prices. Mitali is joining us with the highlights of that.
Right, so Paytm has actually delivered a very good set of numbers, a blockbuster Q1 FY27 coming in with growth accelerating across its key business segments and also the profitability hitting fresh highs in this quarter. The revenue was up 28% yearly, while the EBITDA has surged 182% on a yearly basis, touching an all-time high of 203 odd crore rupees. Also, the EBITDA margins, they have more than doubled on a yearly basis. If you see now 8.3%, and also the net profit, it has grown 79%, highlighting a stronger operating leverage for the company. And the growth, it is not just limited to the PNL. The other business segments, if you see the merchant GMV, it is up 31%, while the financial services revenue climbed 45%, and also the consumer UPI volumes, they have grown nearly 45%, expanding at 2.2 times the industry growth average. The monthly transacting users, they have crossed that 8 crore mark, while the company ended the quarter with a robust cash balance of more than 13,500 odd crore rupees. On the strategic front, the board has approved an additional investments of nearly rupees 100 crores in its wholly owned subsidiary Payment Money to expand their wealth management business. Also, they have postponed the bonus issue as of now, and on the other side, Payment reiterated that there is no financial or operational impact due to the Paytm Payments Bank business winding up. Also, overall, if you see, the quarter reinforces Paytm's transition from a high-growth fintech company to now a business delivering profitable growth, which is backed by AI-led operating leverage, which is actually expanding now to more of the financial services segments, and also with a stronger balance sheet for this quarter.
Moving on then, Bajaj Auto is expected to report a strong first quarter driven by robust export demand and healthy earnings growth. Street expects good uptick in revenue and profit on a year-on-year basis. Avi is now joining us with what to pencil in for Bajaj Auto.
Bajaj Auto is going to come out with its Q1 FY27 earnings, and let's have a look at what we are expecting here at ET Now. We expect the revenues to come in at around 16,960 crore rupees, which will be up by around 35% on a yearly basis, and the EBITDA to come in at around 3,400 crore rupees, which will be almost flattish on a sequential basis, up by just a mere 2%. Talking about the adjusted PAT will be around 2,760 crore rupees, which will be up by 2% on a quarterly basis. Talking about the EBITDA margins are likely to see an impact because of the commodity cost pressure that the automobile industry is facing, and the margins are expected to contract by 70 bips, coming in at around 20.1%. The export market has performed very well for Bajaj Auto, with the two-wheeler and three-wheeler exports outpacing the domestic demand, while the demand in the domestic market has seen a modest growth for the quarter gone by. The increase in revenue is led by the increase in exports, better volumes, better realization, the price hikes that the company have taken, and a favorable forex position that the company holds because of exposure to the export markets. The margins, as I told you, are likely to contract basis the commodity cost pressure, and the earnings are reported to be healthy on a top line basis. What will be important to see is the margin impact in this quarter. a few of the things that we would look out for is the demand outlook that the company would give for both the domestic market and their export market, the kind of margin impact that the commodity cost has, and what the margin number would be, as we expect the margins to contract by around 70 bips, and the kind of price hikes that the company would take to offset this margin impact. So this is our preview for Bajaj Auto for the Q1 FY27.
All right, all the stocks in focus in the back of their earnings and their previews. But with that, it's time to pull down curtains on this edition of Market Cafe. I'll take a leave. Thank you so much for tuning in. Don't go anywhere. The market is coming up next.